Hello and welcome to Smaulgld. In case you missed it, top gold, silver, and crypto stories for the week ended December 31st, 2017. This is the final, in case you missed it, broadcast of 2017. Let's take a look at what we have. Chinese foreign debt rises to 1.68 trillion. We're going to discuss the significance of that. Military and economic tensions are growing between the U.S. and China. We're going to discuss what the implications are for that, for gold, silver, and inflation. Gold finished 2017 up over $1,300. It was up 13%. It was the second year in a row that it has so risen. It was the largest increase against the dollar since 2010. However, gold was down 1% against the euro in 2017. Silver managed to close up about 7% in 2017. Didn't manage to break the $17 barrier, but silver was down against many major foreign currencies. You could check that out. There's a link below. We've done charts on gold versus major world currencies. Cryptocurrencies, Cardano and Ripple rip higher. We're going to discuss what they are and why they might be rising. JP Morgan, surprise, surprise, fined in yet another fraud case. Copper continues to climb. And 2017 ended with no COMEX default, no gold-backed yuan, no sovereign-sized gold buy, no dollar collapse, and no digitized asset SDR. I mention this because during the year we heard these stories. They were bound to happen. Game over, game changer, Sun Tzu. China's doing this, and gold-backed yuan is a game changer. China didn't even put forth the yuan-denominated oils contract yet, which they will do most likely, but it will not be gold-backed. There was no sovereign-sized gold buy that was going to shock the world and rock the global markets. Never happened. The perennial COMEX default. They're running out of gold at COMEX. They're going to default. Never happened. There was no dollar collapse. And the ridiculous AC chain. They're going to digitize T and assets, roll them into an IMF SDR, and enslave humanity. Never happened. That's not going to happen. So let's take a look at what actually did happen. This is not a year in review, just a week in review. Let's take a look. By the way, if you enjoy these podcasts, and there are a few of you that do, some people like to hear game over, game changer, and they definitely get the bulk of the traffic. But if you like to hear the facts, you like to hear analysis, you like to see charts, please consider keeping this channel alive by donating to Smaulgld via PayPal, via Bitcoin, via Litecoin. Links are all below the BitChute. They're below the YouTube. They're on the Smaulgld site. Or consider becoming one of Smaulgld's 10 or so patrons. The links are all on the site. Now, let's take a look at gold and silver. Gold closed the week up 2.2% and managed to get above $1,300. Closed the year at $1,302. Silver rose more, but did not crack $1,700 for the year. You can see here on the final day of trading, silver did manage to get up to $1,708. It looks like it was going to happen. It looks like it was going to stay there. And you can see around the same time they smashed down silver. They did smash down gold, but they couldn't get it below the psychological 1,300, but they did manage to crush silver down below 17. So gold made it, silver did not. Now, the gold-silver ratio ended the year at about 77 to 1. Let's take a look at the gold-silver ratio. This is another story that the pumpers, just like the COMEX default and sovereign-sized gold buy and gold-backed yuan, they'll insist and they'll tell you silver is the rarest thing and it's the most valuable and it's destined to go higher. And the gold-silver ratio has to come down, unsustainable. Well, I got 20 years of charts to show you that it is sustainable, so let's take a look. First, here's the month of December, and you can see the gold-silver ratio comfortably above 76 to 1 all month. Let's take a look at the year. This is 2017. I remember the silver pumpers were talking in here, drop all your gold, turn it in for silver because the gold-silver ratio is going down. Went up to almost 80 to 1 and has stayed there. Closed the year, as we mentioned, at about 77 to 1. Lowest it got this year was 68. to 1. Let's look at a 5-year unsustainable gold-silver ratio chart. Well, 2013 was the low. It was at 53, 52. And during the 5 years, it's averaged about probably 68, 70. How about over 10 years? Clearly, it's got to go down to 16 to 1. That's how rare silver is compared to gold. Wrong. When silver did its once-in-a-generation spike all the way up to 50, the lowest the gold-silver ratio got for a brief shining moment was 32 to 1. But you could see over the course of 10 years, again, the average has been at least 60 to 1. 20 years. It's unsustainable. Well, there it is again. Other than this drop here in 2011, when it got down to the 30s, here is the demarcation line of 50. It has been over 50 all this time, mostly over 60. There's 60 in the last few years, over 70. So you can believe what you want to believe. Things are unsustainable. You can believe in COMEX defaults. You can believe in gold-backed yuans. You can believe all the hype and the nonsense, but just take a look at the numbers. And then you can claim manipulation. That's fine. If you want to believe everything doesn't happen because of manipulation, there's nothing wrong with believing that, but don't expect the manipulation, therefore, to change anything. Because if you knew about manipulation before the predictions were made, then why would you expect them to change? Oh, I know. Elites are losing control. Okay, losing control. All right, let's take a look. Cryptocurrencies. So now it's a big deal in South Korea. They go nuts for cryptocurrencies. The prices of cryptocurrencies in South Korea on a given day may be 10, 20, 30% higher than the prices on other exchanges. South Korea has been relatively lenient on cryptocurrencies, but now they're getting pretty upset, and they're trying to regulate more the crypto space because they think it's in a dangerous bubble. But hasn't slowed down. I think Bithumb is the #1 largest cryptocurrency exchange. That's in South Korea, and so is Coin1 is another large one. Now, during the week, we saw big rises in Ripple, which is a centralized currency. It's meant to be a bank product. A lot of people in the crypto space think it runs counter to all the concepts of why people would be into cryptocurrencies, but fear of missing out. People are diving into Ripple, diving into Cardano, which is really, it's not anything yet. And Ripple actually went from like 34 cents up to about 2.75 during the week. It came down to about 2.25, but it was almost a tenfold rise in about a week. And that's Ripple. Now, that's clearly people in fear of missing out. They see something going up. The other thing I noticed about the price of Ripple, and even more so Cardano, most of the trading were people swapping their Bitcoin into Cardano and Ripple, and some Ether into Cardano and Ripple, which means that they did not go out and use fresh funds to buy these currencies. And I just thought of something now. Another reason that they might have done that was under the new 2018 tax rules. If you make a crypto for crypto like exchange, you have to pay gains on the taxes. So if you sell Bitcoin to buy Ripple, you pay tax on the gain that you had on Bitcoin when you sold it. But this year and prior years, it looks like they were allowing you to say you don't have any gain until you cash out. So maybe people are making these like-for-like exchanges, knowing they're pumping up a coin, they can do it, and then they'll pay the tax next year when they actually shift out of Ripple and back into Bitcoin or whatever else they do, and then those transactions will be taxable. Just a thought, something to keep an eye on. But clearly, Ripple and Cardano were not necessarily new money pouring into these cryptocurrencies, but rather people swapping out of Bitcoin and Ethereum. And as a result, we saw Bitcoin take a pretty significant decline, a few $1,000s, 20 some odd percent, over the past week, while the others rose significantly. Here is an article here talking in Forbes. Here's the rationale for buying Ripple. New investors that are flooding the market are more interested in the return they might generate than decentralization or immutability, or just because. Basically, people are buying these things because they're going higher. Now, I've mentioned this before. The people that bought Bitcoin last year, 2 years ago, 5 years ago, yes, they were interested in going up, but these people actually understood and knew what they were buying. They believed in it. Right now, you're at a mania phase where they don't care that Ripple may be a banker's tool, or Cardano isn't even. It's not at the point where it is anything yet, really, and they're going to buy it anyway because it's going up, and that's basically what's happening in the crypto space. I mean, the other thing that's happening is Cardano and Ripple. These were cryptocurrencies, and Cardano still is, that are below $1. So you get the mentality, oh, they're cheap. Now, people don't realize that there's billions upon billions of Ripple, and there's only 21 million Bitcoin. That's why Bitcoin is $13,000, $14,000, and Ripple was 34 cents. It's just market cap. A lot of the new investors, they don't realize that. They think, oh, I can buy Ripple at 34 cents, and when it goes to $13,000, game over. I'm the richest person on the planet. So there is that mentality. People are buying the cheap cryptocurrencies right now. I think that'll change in 2018. I don't think that will be sustainable, and that people will just buy anything because it's got cents next to it instead of dollars. And I mentioned here, some people are buying altcoins that are $5 and under with the misunderstanding they're undervalued compared to Bitcoin. And there's been a lot of things people saying, you know, who benefits from Ripple. If Ripple is basically a bank payment transfer system, why would you want to be interested in that? Especially if banks aren't using it. What are these tokens worth? Why would you want to have them? Oh, they're going higher. Now, some people say, well, you could say that about the whole crypto space, which is a fair comment. But I believe that Ripple is even more of a bubble within a bubble, and it's irrational even for the irrational crypto bubble. And there's no rational sense to me for anyone to buy Ripple other than it's going up. But again, you could say that about all the cryptocurrencies. This person asked, where did all the Bitcoin bulls go? And I think where they went was they went to Ripple and Cardano during the week, and also I think they were booking gains for 2017, and they'll probably be back in 2018. Now, remember Ripple? For those of you over, I guess you have to be over 45, I don't know. Ripple was like bottled wine with a twist-off cap. You drank out of a brown paper bag. There was Thunderbird was another one. I don't know if they make these anymore. Really cheap wines they add alcohol to them. And Ripple, to me, is not a cryptocurrency. It's this wine. And I found this website, Sanford & Son. Again, you have to be over 45 to watch that show, too. Maybe even older. It was, they ran a junkyard. And this site was mentioning, due to its low price, this is Ripple, it had a reputation as a drink for alcoholics and the destitute. That's how I think of Ripple. And again, it's cheap. So maybe that's the attraction. People are moving into Ripple because it's cheap, and it gets them the cheap high that you would otherwise get from perhaps other cryptocurrencies at higher prices. Dollar collapse. Now, here's a chart I did during the week. You guys might have seen this in other videos I've done, but just a reminder, everyone's talking about this is the biggest drop. Look at that drop here. 2017, horrible year for the dollar. Game over. SDR is going to take over. The Chinese yuan is going to, all that stuff. Well, that's because, look, it's still well above the last 8 years. That's the dollar index. You have to put that in perspective. Yes, it dropped this much, but look how much it rose. It rose from 2014 to 2000 very dramatically, leveled off, and then it popped up again all through 2016. So now it's just back to where it was at the beginning of 2016. Not so much of a dollar collapse, but a correction. During the week, we released the holdings of U.S. Treasuries by foreigners. Very surprising. Saudi Arabia up, Russia up, China up, all up during the year. Here's a chart in the video. You can see re-dollarization with countries increasing their holdings of U.S. Treasuries. You can check that out at the website or on the YouTube channel, the BitChute channel. Those videos are up. Now, Litecoin. People are still pushing Litecoin, even though it went down, even though Charlie Lee, the founder of Litecoin, sold his shares. A lot of stories here on Litecoin. Now, the question is whether Satoshi Lite or Charlie Lee, who is the founder of Litecoin, his selling of the shares is going to impact the price going forward, whether there's a loss of confidence. Some say there is, some say there isn't. He's promising now, and I don't think that there was a conflict, unless he's going to take a job with a company that deals with Litecoin and he has to make decisions about Litecoin. That would be a conflict, and he shouldn't have the shares or the coins. Or if he's taking a government position on what to do with cryptos, then obviously he can't be making decisions when he's a big holder. Other than that, I don't think he would be required to sell based on a conflict. But having said that, he has mentioned that he's going to stick with Bitcoin. There's a tweet here somewhere. Maybe I didn't take it down, but I'll say what he said. He said he's going to stay with Litecoin. He feels bad in that he's going to stay with it until at least Litecoin gets back to its all-time high. Now, he claims there's a huge surprise coming, and there's some deals coming in the first quarter of 2018. If he's right, or if that's true, I would imagine if the interest is still in the crypto space in the first quarter of 2018, those are the types of things during a mania that would drive the price higher, just like .com. You didn't have to report earnings. You just had to have the CEO show up on CNBC, or you had to announce some big deal, and the price went higher. We'll see if that continues in 2018. Now, some are saying it's trouble for Bitcoin, that the Bitcoin percentage of the market cap of the overall crypto space has gone from like 99% down to 38%. I think if you're just, well, first of all, that's foolish, because Bitcoin's market cap itself has risen from 40 billion to 50 billion, 100 billion to 200 billion, and so on. The whole crypto space is getting bigger. It's not a sign that Bitcoin is in trouble. It's a sign that the whole space is getting bigger. That'd be like when AOL was just AOL and it owned the whole space. Sure, it's not going to own the whole space, and eventually it's going to lose market share. But AOL grew during the 10 years of the internet boom, just like everyone else did. It's just that the entire internet space grew, and Netscape and Sun Microsystems and all the other companies also grew with it. So I'm not sure that it's kind of cherry-picking data, because the whole space is growing and Bitcoin has grown along with it. Now, during the week, I did challenge this concept that Bitcoin is a money laundering instrument. It's not money. No instrument in and of itself is a money laundering instrument. There are instruments and services that you can use for money laundering, like cash and lawyers and accountants, and you can use Bitcoin as a money laundering instrument. However, what was interesting, and you could check this out, I did a much more in-depth summary or analysis of this, but the UK Treasury just put out its report last month, and they said that the things they're most worried about for money laundering are cash, banks, accountants, and lawyers. And that digital currencies like Bitcoin ranked the lowest. And there's a lot of reasons for that, and I won't go into all of them. I'll just give you one of them, is that there's not a lot of places you can convert your Bitcoin into fiat without anyone knowing about it, whereas cash can be done a lot easier. Also, Bitcoin leaves a trail, cash does not. Lawyers and accountants are prime suspects for money laundering and terrorist financing, even political interference, because they can cover the tracks a lot better, set up structures, make payments directly, and so on. So Bitcoin as a money laundering instrument, nope, it's not. That's just I think if you're just, you want to be against Bitcoin, I think there's a lot of reasons you could be against Bitcoin, but saying that they're going to arrest everyone who's ever used Bitcoin because they're money launderers is ridiculous, because you can't just arrest somebody for a crime that didn't exist at the time that you engage in the activity that they're now saying is a crime. Crypto regulations, we saw South Korea jump in again, as we mentioned up at the top. India likens cryptocurrencies to Ponzi schemes, cautions investors. Now here's the best one of the week, JP Morgan fraud. I've done a chart that shows that JP Morgan's paid about $40 billion worth of fines over the last 7-8 years. That's more, that's 3 times more than the annual silver mining production. And these guys are just paying fine after fine. It's a cost of doing business. The latest one is a very small fine, $2.8 million for failing to segregate customer funds. Now, that's banking 101. How you cannot do that, you have to do it intentionally, I would imagine. And the reason you do it is if you don't segregate them and you keep them, and I don't remember, I didn't see how much they were talking about, but funds that are fungible for the bank that are not held on behalf of clients, that means the bank can make money off of those. So they can lend them, they can do whatever they want with them. And I'm sure they made a fortune doing that until they got caught. And unfortunately, $2.8 million is nothing to them. And the fine really should be, then they can't take customer funds, or they have to pay 3x or 10x the amount of money they made from not segregating the funds. But paying $2.8 million, they might as well tomorrow just go out and unsegregate those funds and start trading them and do whatever they feel like doing with them. Now, gold and silver for the year. I won't go through this, but you can check it out. I've done a long video, not long, this is a 10-minute video, and the charts are on the website, Smaulgld.com, where you can see gold versus the major currencies. As I mentioned, gold was up against the dollar, silver was up against the dollar, but gold was actually down versus the euro, and silver was down against 4 or 5 of the major currencies. So check that out on the website or on the YouTube or BitChute channel. Miles Franklin, they finally added Bitcoin as a payment option, and they join a large list of companies, the bullion dealers that now take Bitcoin, but not yet Litecoin. BitPay needs to get on that. But APMEX, Amagi Metals, Bullion Star, GoldSilver.com, Gold Money, JM Bullion, Money Metals Exchange, Provident Metals, Silver.com, Shift Gold, all take, and Miles Franklin now all take Bitcoin as payment. Copper's rally is longest in a generation. Very interesting. The reason I mentioned silver is a byproduct sometimes of copper mining, and I think a lot of the silver mining production doesn't get reported either. Not through any fraud. It's just that it's immaterial to the companies that are public. The amount of silver that they produce, maybe like 4 or 5% total of the revenues, so they don't break it out, so it doesn't get counted. Or there's non-public companies and they don't report it at all. But silver definitely on the up over, I think, the most recent price of copper. It's not yet at all-time highs or anything. It's like $3.26 or something like that. And it's, you know, it was below 280 at the beginning of the year. It's back to where it was back in 2012, but it had gotten down to about $2 in 2015. Goldpumper.com. That is not a website. That's just where I like to put in the week's gold pump stories. Here it is. Double 10x alert. Must read. Shock the world. Something big is brewing in gold and silver. Yeah, gold and silver mining stocks are, it probably says, headed for the stratosphere. Game over. Yeah, so here are the reasons this year to buy gold and silver from the gold pumpers. COMEX default. Silver shortage. Remember 2016. We're going to run out of silver, guaranteed, during 2016. Rickard said SDRs, we got to worry. Message to Trump, SDR to replace the dollar on January 1st after it collapses. That's tomorrow. So go out and get your SDRs. Gold back yuan, we heard. Game changer, according to Mike Maloney. Game changer, gold back yuan. Asian Nikkei Review covered that story. Gold back yuan. Sovereign-sized gold buy in 45 days. We heard that one. Never happened. But it's coming, I promise. I promise it's coming. Shock the world. They still talk about there being no gold in Fort Knox. Okay. They know. They know there's no gold. Because they've been there and they haven't seen it. Does that make sense? Okay. Roman coins. And here are the finds of the week. You can check these out. Click on these links. There's some beautiful gold Roman and medieval coins and rings found in Cornwall. Here's one, Hidden History Vidpoint silver mine in Magic Valley. Silver was $1 an ounce in 1918, over 100 years ago. Here's the latest smuggling stories. A lot of it goes into India. This smuggled precious stones and gold. And here's another Dubai jeweler, smuggled gold into India. Let's get to China. China's vision of peace and harmony through trade and sound money and gold. A lot of the gold bugs have this mythical opinion of China that the United States is just out there with dollar hegemony, destroying the world. But China is this peace-loving, wonderful, harmonious country that loves just to trade and do things the right way, and they love gold. Yeah, as I like to point out, China is a debt monster far bigger than the United States. They've got internal debt over $30 trillion. They don't have anywhere near the amount of gold to cover that. They're a totalitarian society. Internally, mass executions, no internet freedom. That's a communist country. What can you expect? But now we find that China's finally in the foreign. They always say, well, they owe it to themselves. It's no big deal. Okay, you just print up money, pay yourself, bail yourself out. No big deal. That does not give anyone any confidence in the Chinese yuan, which these guys keep saying is going to be internationalized and destroy dollar hegemony. Well, China now, we learn, its foreign debt rose 7.5% in the third quarter, and it's now at 1.7 trillion. So China is now getting into foreign debt, and I guarantee you they will continue. It's funny, they show these pictures. This is probably typical throughout China. They're just building a lot of these. They'll probably never be filled, but debt will finance them. GDP will go higher, and everyone will think it's a Chinese miracle. Now, militarily, Taiwan is concerned about Chinese military maneuvers. I thought China didn't do anything at the military. They're not like the big bad United States, imperialistic. No, they just want to stay with themselves and trade and buy gold. Well, Taiwan doesn't think so. Here, China's hypersonic ultimate doomsday weapon could wipe out the U.S. in one shot because they don't build military weapons. No, they just want to trade. Now, Trump is saying that China's caught red-handed, very disappointed that China's allowing oil to go into North Korea. That was part of the deal they supposedly made. Now, I read that somewhere that China said, no, they have stopped trade. So who knows if they're still sending oil to North Korea, but we'll see. Is the Chinese president worried about, the Taiwan president worried about Chinese aggression? Now they're saying that Trump is poised to hit China with shock and all trade penalties. This is a big deal. If Trump would go through and put tariffs on Chinese goods, we would have inflation because in the United States we get a lot of cheap goods from China. They would rise in price, or they'd have to be replaced with domestic goods with a much higher price. So inflation and raising interest rates wouldn't help cut that inflation back. So you would see a nice boost in gold if that indeed happens. And that's what I'm saying. If there's a tariff on Chinese goods, we'll see price inflation on the bulk of consumers' goods, and that would be good for gold. So we'll see what happens. Now, China also reported, or People's Bank of China also reported their gold reserves. They've been flat for 13 months now. Doesn't mean there's not gold in China. It just means the People's Bank of China is not reporting that they have gold, that the gold is probably elsewhere in the country. You can get a full overview on that by clicking on the link or going to that video. There's the video. And that about does it. Well, I want to wish everybody a happy new year and thank everyone for listening during the year. And we will see you next year. We'll have all of the major mint updates, Indian, Russian, Chinese, gold, and silver reports. So please remember to like and subscribe. Happy New Year.